$3,000 on Boeing today, and I did Facebook,
Nice.
1,000 on Facebook. So I find those more controlled, meaning when I'm shorting them, I'm looking for $1 or more, but my stop loss is going to be minimum to 35-cent risk. 1,000 shares, $350. But it goes down $1, I'm going to make $1,000 just like that. So I was able to scale that thought process and trade the mid to large caps.
Welcome back, everybody, to the Steady Trade podcast. Today, Kim and Curtin, that's me, and Stephen Johnson, that's him, are going to be welcoming Latoya Smith to our podcast. We're very excited to have her here. I learned about Latoya very recently in Jane Galena's book, FMJ. And then I reached out to you, a couple of weeks ago, and asked you if you'd come on the show. As you guys know, I'm a baby trader. I'm still learning, but there was something about Jane Galena's book that really touched me because all the stories were women. And I just felt this kind of energy in my step after reading that book. Like, wow, maybe I can do this. I don't know. I just think I have my own self-limiting beliefs, and to just see many women. And part of what really impressed me about Latoya is that she has done this with children and did this with a newborn. And I'm just like, I can't imagine doing it without any children. And yet she did it with children. So, I'm just excited to have you here, Latoya, and
thank you.
Please welcome to the show.
Thank you for having me. Thanks.
Yeah. So tell us a little bit about, your background. I know that I read your story in Jane's book, and Tim Sykes even shows up way back in 2000. Was it 2006?
Yeah, late 06 until 2007, correct.
Okay, so go ahead. Tell us a little bit about how y'all got started and all of that.
Okay. Well, I came from a finance background. I took finance in college, and after college, it's more like I was trying to find a career that basically focused on the degree that I got. It was only right. It only made sense. So in that process, I found a few jobs. One in particular was working with a custodial bank, which is State Street. And during that time, in my search, there has to be something more to just actually working. I'm gonna backpedal just a little bit. After my friends came back from college, we all decided to form an investment club. And through that investment club is how I really got to understand exactly how the stock market moved. Not completely, but just getting our feet wet because it was new for everyone within that group. So since I was a treasurer, I used to watch our stock portfolio. We all voted on StocksToTrade once a month because we met once a month. And whatever we decided to buy, I would go into the account. Our brokerage account at that time was StockTrade, and place the trade. And I just noticed one thing that was revealing to me. The stocks fluctuated up and down and throughout time, maybe 3 to 4 months. I'm like, if we sold this probably a few months ago, we would have been up. But everyone had that long-term perspective because that's what we're mainly taught. Hey, you have to sit on this, hold it for a year plus or more, etc. So I went back to the group and I said, hey, we can make money so much faster if we just decided to sell once we're up and just repeat the process. They didn't understand that because nobody was watching the account like I was. So I saw the fluctuations, I saw the movement. So what I decided to do is open my own brokerage account. I generally don't really recommend it now that I know as much as I know, but before I threw in $5,000 in the account, and it was just okay, now let me get my feet wet in terms of I can do this too. So I started Googling, lovely Google, how to start a hedge fund, how to, do certain things. And that blog, his site came up, Tim's site came up. And I just started following, communicating for a little bit, because at that point, he was just getting started in terms of replicating what he did in college. So I'm like, yeah, let's see how true this really is, you know?
Yeah.
So that's how I got a feel for learning about small caps, the penny stocks, how they move, how they fluctuate, pumps and dumps, etc. That's really how I end up getting started within short-term trading is what I called it.
Wow.
And yeah, throughout the years, like going into, let's say, 2008, that's when the market started really around late 2007 into '08 when the market started falling. I was going through a transition within myself in terms of switching jobs.
Mm.
I found another job, paid much more money, and um, within the investment banking field. So it's just like, yeah, I should take the job. And at that point, my trading account, I was doing very well. I was doing very well with it. I ran into some other people, all online,
Wow.
all online. Some other people where I was participating in this one trading room. It's old school. It was called the green room or the green screen or something like that. And we was all trading together. They liked the way I did the trades, and they asked me to come on board because they were starting a new platform. This is 2008, mind you,
Wow.
during the summer. It was called Investors Live. That was the
Okay.
platform. But here goes the thing. I didn't take up the offer because I was ready, like, I got this new job and I already knew the limitations. I can't be in a trading room. I can't have access to my own brokerage account because of compliance. So that kind of put trading a little bit on the back burner for me,
Mm.
even though I was really still interested. So what really snapped me kind of into like this reality was like 2000, and now I'm watching the same people I was trading with progress even further. And I'm like, hold on. This is actually like you can really make good money trading and doing this. So that's when I came to make the ultimate decision that I needed to get to the point where I wanted to be able to trade comfortably without having to worry about anything financially. So I went into a whole saving mode when it came to like stashing my money so I can get that 25K to ultimately day trade. That's
Wow.
really was my journey. I had a little, bumps along the way. I ended up buying real estate once I got that job in 2008, and it wasn't a bad decision because it was dirt cheap for what the
Yep.
property is worth today.
Yep.
So throughout that process, I've learned a lot. I learned a lot in the real estate market, and I learned a lot in the stock market. So when I finally decide to pull the trigger or the cord or the plug, meaning get rid of my 9 to 5 that was paying me very well, that was 2012.
Wow.
Decided to quit my job.
What does it feel like now to look back that you had the courage back in 2012?
Um, it was a little nerve wracking, to be quite honest with you. It was a little nerve wracking because I know I was giving up something that was sure.
Yeah.
We call it like sure money. It was a paycheck. But at the same time, it wasn't really about the money for me. It was about that happy place. I wanted my time back. And I know I wanted kids then in the future. So it's more like, do I want to go through the process of I'm working, they have to go to the babysitter. By the time I pick them up, it's extra late, and we repeating the same process again. And I did not want to live that life. So that also helped me make the choice that, you know what, it's now or never. Let me just do it.
So can I just say, are you with Nate and Cam now? Are you with the guys now, or
No,
do you know the
no, no.
guys? Do you know the guys
Um,
still, or?
they came to Boston last year and briefly had a conversation with Nate. So yeah, he remembers. It was a way back. This is when this guy named Muddy was around, but unfortunately he's no longer around. But this is a throwback. Throwback.
Yeah, no, but I see that Nate like kills the stocks day in day out, week in week out. But you're saying that you moved to futures, so you went to something
So
else, or?
no. So what ended up happening, that's like more of like small caps, penny stocks that I was trading around that time. But once I decided to do it full time in 2012, I started searching for something that was more, I call it control. I made good money trading the small caps, but my issue then was more so that control of a control loss. Because you can make thousands of dollars trading small caps, but in a blink of an eye, you can lose thousands of dollars too. And that,
with a press release, if the wrong
yeah,
press release.
exactly.
I
And
mean,
that,
it just happened to us the other day. Yeah.
Oh no.
yeah, and that did not sit right with me. Meaning, like, no, they got to be something a little bit more controlled than that. So I end up communicating. I have a cousin who lives in Florida, and he was with a prop firm for a while. And I reached out to him. I'm like, hey, listen, this is what I'm currently doing. So we used to get on the calls, and I used to go through my process. And he's like, why are you even trading that market? He said, check this out. This is what I do, and this is my criteria. Meaning he would trade mid to large cap stocks. So that's what I do to this day. I trade mid to large cap stocks with the same principle of momentum, meaning like a penny stock, for example, if it gaps. I think the trade today was GNUS that moved like crazy, right?
That was no joke. That was no joke. I think a lot of people would have lost a lot of money on that.
So for example, that move that had momentum in pre-market, but my criteria now is I'm looking for stocks that are $20 and up rather than $20 and under. So I still trade based on the same momentum, but my stock prices are much higher, meaning I have more of a control risk.
And your percentage gains are much lower as well, for sure. But
I mean,
you still make good money though. I trade that as well.
Yeah,
no, I trade, and I know some of those, like Netflix. Netflix moves. Netflix moves. Like, don't worry.
Exactly.
I know.
For example, Boeing moved 9% today. I did a nice trade on Boeing. $3,000 on Boeing today, and I did Facebook, 1,000 on Facebook. So I find those more controlled, meaning when I'm shorting them, I'm looking for $1 or more, but my stop loss is going to be minimum to 35-cent risk. 1,000 shares, $350. But it goes down $1, I'm going to make $1,000 just like that. So I was able to scale that thought process and trade the mid to large caps.
No, I get that, and I think it's solid. And I know some different traders that trade the mid cap stocks, large cap stocks, and some strategies, like, do you know Airplane Jane at all? I know.
Yes, she's featured in her book.
Sorry.
Yeah, she interviewed her.
Yeah, so Airplane Jane looks for the hidden, what the larger companies are doing, and then she kind of follows the tracks and the movements of the larger companies. But the strategy that I was taught with the mid to large caps was, I mean, obviously, if you get 3 green days in a row, look for the double top. If a stock's severely down in the market, the overall SPY is bouncing, look for double bottom. And I got taught to play the double bottoms or the triple tops and stuff like that. But for you, what's your strategy? I'm very curious.
I'm a gap trader. So I trade gaps, meaning any stock that have earnings, for example, like today I didn't really see much that I like. Zoom webinar was yesterday. So Zoom webinar had earnings after market. So they didn't really have a gap today, but yesterday they gapped it up. So that was a trade yesterday where we shorted. It ended up being a fade. So that's how I trade. I trade based off of upcoming earnings or after the earnings report hit, because the stock is either going to gap up or gap down, and I'm going to trade that stock generally in the direction of the gap. That's my strategy in a nutshell.
But I mean, if a stock gaps up and it's hitting into resistance, so what? If the earnings are good, you'll still short it into resistance, and you'll say, "Oh, look, I've got one risk reward," or what?
For example, Zoom didn't have a resistance yesterday; it was all-time highs. So
how did you play it? How did you play it?
Oh, we shorted it, but it wasn't based off of resistance. It's more based on the opening range. So one thing, you always got to learn your candlesticks. Either a candle was bullish or bearish, and it boils down to that simplicity. So we had a few bearish candles in a row, time to short that. We know the selling pressure was coming in.
Fascinating.
So that's gaps on stock. So I'll do that from the opening range till about 11, maybe 12. And then earlier, I usually get up around 6:37. I'll trade the futures market. So I trade both markets, and I also do Forex, but Forex is more swing trading for me, because to me that market moves a little bit slower. then I'm used to trading the equities open or the futures that moves as well.
Am I correct? You try to be finished based. This was, the book that Jane did interviewing you was a while ago, but you talked about trying to be done by noon so you can be with your kids and feed them lunch.
It's the same way. It's the same
Wow.
way.
That's
So
amazing.
yeah, I usually finish by 11:30 a.m. noon, the latest, and that's it. I usually don't look back at the computer after that. That's it for me. And it's been a little bit different since most of the kids are not in school because of
Yeah.
COVID, right?
Right.
So
I would
they've
imagine
been
harder
yeah,
because now you
they've
got to
been
entertain
home.
them and
And
teach
not only
them.
entertain them, I have to teach them.
That's right. You have to teach
I have
them,
to play
right?
teacher, and I'm like,
That's
so my
hard.
schedule's all crazy right now.
Oh God. And
Yeah.
do you feel like you had what inspired you at the time? I really noticed in your interview in Galina's book that you didn't even think of the concept. She asked you about, being a woman trader and what that brings to the equation. And you were like, I got the sense you hadn't even really looked at it through that lens.
I did not. I did not.
Yeah.
To me, like at that time, I didn't look at it as, a male dominated field versus women, etc. I had a point of view of I was trying to get to a goal within myself and to benefit my life at that time, not necessarily how I'm going to impact other women. Like I didn't see it through those lenses. It's more apparent now because we're noticing there's is more of a dominated male field. So the more people point it out to me, the more I understand, like, yeah, I get it, I see it, I understand it. But going into it, I didn't look at it that way at all.
You didn't. I think more, I'm curious, like, did you bump into any kind of, who do I think I am that I can do this?
No, I didn't have that. I didn't have that feeling at all.
That's awesome. That's
I
awesome.
didn't have that feeling.
That's
Because,
great.
yeah, I didn't think like that.
Yeah. I think that is a fantastic. So what would you say to, let's say, any women that are watching now, or anybody, right? Any beginner or baby who hasn't really dived in yet, what would you say they need to have to do this and to do it well?
I would say you need always the confidence. Is the confidence. I think so. A lot of your questions you just asked me, maybe because I went into this already confident, even though I wasn't really sure 100% that I'm going to succeed, but I had the confidence to be leaving myself that, you know what, I can give it a try. The worst I can do is fail, right? That's the worst. I fail. I really don't really say what's my plan B. Do I have to look for a job again? But it's just more so have the confidence, but also when you go into trading specifically, not necessarily investing, because investing is long term, but when you go into trading, have a plan. Is a plan. And I think a lot of newcomers go into this without a strategic plan. And what I mean by plan is, what is your stock? How are you finding your stocks to trade? Once you enter your trade, what is your risk? Whenever I enter the trade, I always think of how much can I lose, never about what I can make. It's always what am I going to lose first? When I enter the trade, what's my risk? And I think once you define that, you kind of get rid of that fear because it's already known. Like, I already know that if this trade goes south, I'm gonna lose $350, so approach the markets with a plan.
I would jump in and I would agree with that. But I would also give the prerequisite that it takes a lot of experience to make a really good comprehensive plan. And sometimes the market and its variables move so fast that you need to make plans on the go, and plans change and plans are on the fly. And would you agree, or would you say, I have this plan and I'll stick with it and this is me lost?
I would disagree with that only because of my experience. And at one point in time, I understand where you're coming from because it all depends on your environment, your surroundings. So let's say you're in a trading room and you already came in with stocks to trade, but you see other people posting these different trades. So you go in on a trade they suggested, you never had a plan for that trade. I used to be one of those where somebody would throw a stock at me or ticker, And I didn't do research, meaning I have no idea where it can go in a chart. And I'll get in that trade and it goes south. It's like, tag, I know better. I should never, follow somebody that I have no
No,
idea where that stock would go
no,
in terms
I
of
agree
like
with
that
that.
momentum.
No, I think you need knowledge, and then knowledge forms a plan. And then you have to have a plan based on every variable, whether it's the news, the filings, the long-term chart, the general market, and how it's trending, the SPY and the Nasdaq, whichever one you're watching. But all I'm saying is plans can change, and your stop loss may change based on how the market's reacting. No, or will you be like, that's the plan and that's it?
No, that's my plan. That's it. Yeah.
Okay. Okay.
Because when you're looking at an intraday chart, and that's why I can only really speak based off of the mid to large caps, because the small caps are different. They behave different. Mid to large caps are quite boring and quite predictable. So that's why the plans don't vary. It's like it's either going to break out or break down. Like you will see the formation on the chart. And the stop loss is always based on where it cannot go again and go from there. That would not adjust, because everything for me when I trade is all about technicals. Technicals on that chart.
And what
Where's
does
the
that
last
mean?
support? Where's the last resistance in terms of technicals?
Okay. Well, technicals, what I kind of get what that means, but because I'm still so new, just pull that apart a little bit, what the technicals mean for you.
Yeah. Technicals for me is predicting past price behavior predicting the future based off of past price behavior. Okay. Every stock generally would establish some level of support, some level of resistance. So when you're trading, it could be swing trading, day trading, is always about the prior levels where price was once at. So if I'm day trading and I'm looking specifically, I'll give you Boeing, for example. I'm looking at Boeing and I see it held at prior support, and it is telling me that, hey, I'm holding here, I'm not breaking down. My mind is thinking I'm going to buy that stock because it's going to go up because it already held the support. Now, all I have to do is find is my target, which is usually a prior resistance based on that chart.
And that prior resistance, is that within a particular time frame?
It's always a day. I'm looking at a bigger picture. Okay. And that's what most traders don't do. They look at these 5, 1 minute, whatever, 15, whatever charts, but not really looking at the bigger picture. I always look at the bigger picture because the candles are based off of the bigger picture. It's just a moment in time that we're looking at, 15, 5 minutes. And that's why, so many people probably get chopped up and call it noise, but there's formations that happen to coincide with the larger picture of that actual chart.
I'll just jump in. I'd say there's 2 golden rules, and I actually went out to meet Tim Sykes in Italy. He flew us out to hang out with him, and I met a guy called Roland Bolt. And Roland Bolt's I don't know if you've heard his name, but he's a fantastic penny stock trader. But the 2 golden lessons I learned from Roland Bolt and Tim Grattani, who's another penny. You would have heard of Tim Grattani, I think.
Yes.
But the lessons that I learned from them is never look at your profit and loss. Form your basis on the stock chart and look at your pattern. Trade the pattern, don't trade profit and loss. And the second thing that I learned from Roland Bolt particularly was look at maybe a 30-day, 15-minute time frame. Because if you look at like 20 days, 30 days on a 15-minute time frame, you're really going to see what's going on. You're really going to see the support and resistance. I don't know if maybe you'll see the daily is more prominent. I know the daily levels are really key. But you can also have some findings on a 15-day, 15-minute, 20-day, 15-minute level. And for me, I map the support and the resistance out based on that. And it's amazing how many times you'll see traders react to those levels.
Yes, correct.
So this is how you trade. This is your style, basically. But the daily, which would you say is more important, the daily or the 15 and 15? Or the 20-day 15?
When you say 20-day, like 20-day, 15-minute chart, meaning
exactly. Yeah.
I would have to look into that, because like how I'm thinking about, if you're looking at 15-minute support and resistance based off of 20-day, a 20-day period, it still will probably align with the daily levels, because they're going to be significant to some point.
Kind of is, but I'm just asking because I know a lot of people who are like gung ho daily. This is all I look at, and I know some people who are like 15. So
Yeah,
I'm just
I'm
curious to see
more.
where you
Yeah,
fall.
I'm definitely. It's a little different for me. I'm definitely daily, because you have to remember, I trade gaps, and gaps are specific. They're not like I'm trading a stock that has no gap. So for what I mean by that, let's say Apple just opened up inside of the prior day candle. I'm not trading that. There's no edge to it. But when a stock gaps up, it leaves a space, right? A void. It's
Yeah,
the gap in
yeah,
above or below a level. If it gaps down,
yeah.
it's leaving a void. So that's
Okay.
why the candles are
Ah,
larger,
okay,
because you got range to trade within that
okay,
price. So that's why the
okay.
15, 20 day would be irrelevant, because I'm trading
Yeah.
gaps, the windows.
Okay, so if it gaps above a level and it falls through, you shorten that resistance. But if it holds that level, you buy in that support. Is it kind of like that?
That's about as simple as it gets.
That's good.
Yeah. Yeah.
Okay, okay,
Yeah.
okay.
That's as simple as you, yeah. Don't complicate it. You said it right.
Okay, okay, cool.
You like
I
that,
get
right? You like that.
it. That makes sense. That makes
I
sense.
think a light bulb just went off in his head.
Yeah, no, no. No, I'm trying to figure your strategy, and I know high and mid caps, and I'm just figuring it out.
It's
That's
awesome.
cool.
So how long did it take you to find that, strategy, right? Everybody's got to find theirs that works. That's Stephen keeps teaching me that. Tim Bohen keeps teaching me that. So for you, how long did it take you to bump into that and say, oh, this is it. This is the one for me?
Probably I would say about a year and a half. I, I knew what I was getting into. I'm trying to figure out how to word it in terms of I was already doing it, but I wasn't sure exactly what I was doing, if that made sense.
Yes.
Meaning I was kind of playing the strategy because I'm finding the momentum, but I wasn't really aware of how to perfect it until probably a year and a half after I've been doing the same thing. And what I end up doing, it had a certain point where it was coming around the fall. I literally, I decided not to trade until the new year. Meaning I still showed up to my trading platform, but I did not
Wow.
execute a trade.
Wow.
What that did was force me to watch how the stocks move. And
Wow.
when you observe and you look at the times when a stock trends or when it consolidates and then it trends again, like I'm just going to speak in present tense. We all know within the last 10 minutes, maybe 10 to 15 minutes, you're going to get some sort of surge in like the SPY or the ES futures. Have you noticed that yesterday and all of last week? You sit at the platform, the next 30 minutes, the market just either takes off or they dump it real quick. So it's
No,
just being
no. Yeah.
observant of what's happening around certain times.
But the SPY is pretty weird because it generally does. It'll make a move in the first hour, and then do you follow that kind of action? And you must be following the SPY to trade the cap as, but the SPY will make a move in the first hour, and then maybe it'll pick a direction, and then 3 hours later it'll pick another direction, and it'll reverse. Because do you
Like,
see that in general as a trend?
yeah, definitely, but it's not all the time. Not every day the market trends. That's another thing you have to understand. There's days when the market's just simply sideways. You can call it chop, 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 chop. Like
Uh,
today was a trend day. All the market did was go up.
uh, but your strategy is based on what does the SPY do, what did the GAPAs do, and if the SPY does this and the GAPAs do this, I'm going to do this. If the SPY,
No. So with gaps in particular, I don't have to worry about what the market's doing. That's
okay,
what makes it beautiful. Because when a
okay,
stock
simple.
gaps up or gaps down, is only that stock, right? That stock is being affected regardless. The market could be flying. I'm just giving an example.
Yeah,
And
no, I
a
understand what
stock
you're
had
saying. Yeah,
horrible earnings and they gapped it down
yeah,
because the
yeah.
market's going up. That stock is not going to go
Doesn't
up.
matter.
It doesn't
Yeah,
matter.
I agree. I get that. So you're literally just playing the support and resistance from the gap up and the gap
That's
down.
it. That's all I'm
That's
doing.
insane. I'm going to talk to you after this podcast. I'm going to be like, just give us this example, give us that example. Like when penny stocks are quiet, so literally just short that resistance and buy that support on this gap. Because it's easy to find though, because you're looking at gap scans, you're like, what's up 10% or 8% or 5%, what's down 5% as well.
Yes. Yes.
Yeah, I get the strategy. It's cool. It's cool.
So do you find that you when you talk to other new traders, do you think that this style that you have discovered is best for you because of your temperament, because of your personality? And are there certain, let's say, new traders that you bump into and you're like, they're not going to like this style? It's going to be too, fill in the blank.
Correct. Well, one thing to keep in mind, I'm also an educator, meaning I educate new traders as well when they come to me. So based on new traders, I never want to introduce them into the world of day trading, meaning I rather teach them how to swing trade, because with swing trading, you have more time on your side. Day trading, I don't think is favorable. I'm just speaking from my opinion for new traders. Mm-hmm. You're going to lose money the fastest way attempting to day trade if you do not have a skill in terms of being able to hold a stock for a few days to a few weeks and be successful at that. So what makes a new trader think if they're trying to day trade, they're going to be successful within a matter of minutes, 15, 1 minute, or, until the market closes, because they have a shorter time to process the information that's coming in because they don't have the experience. So I usually have them develop into a swing trader first, right? Learn, find support resistance, identify chart patterns. Where the stock's going to break out? What's a technical entry? If it breaks out, where it's going to go? How, the trend. So they can hold it for a few days or a few weeks and feel comfortable without having to make a rational or a quick decision based off of a shorter time frame.
I'm going to jump in and I'm going to argue with you on that one. And I would say that... No. I would just say that it depends on someone's level of dedication and commitment and the natural ability to trade.
I like that. Yeah.
But if someone wants to day trade and the 100% committed to study, like whatever it is, 10, 12 hours, watch the market every day, I think the more mistakes you make, the faster you'll learn. And if you keep your losses small, then you'll learn faster. But if you go to a swing trade, if you swing in stocks, you'll learn a little bit slower because it takes more time to realize the mistakes.
No, not. I don't know about that. Not necessarily.
It's a different style, right? But it's a different style.
I'm just talking from the results I have seen within the people I taught. That's really where my thing is coming from. I'm talking about people that are brand new. And they start off with swing trading, and then it's like, okay, I get this, I'm doing good, I want to get my feet wet now. What do you suggest? I always say, do you have the 25,000 in capital to day trade? No, I don't. No. All right, come over to the futures market. Then I'm gonna show them how to, because you could day trade futures without the PDT rule. It's the same thing, but it's just a different market. So now, because they know how to find support, resistance, they get it. All we're doing now is breaking down the time frames. But just imagine giving somebody a smaller time frame to trade off of. I don't know how they process that information.
I still think that you'll learn faster. I think you'll learn faster if you react faster and you learn to keep up with the tempo. But Kim is learning penny stocks.
I have a question for you. So with that thought, right? Someone doing it based off of, they just hop right into trading, day trading.
Yeah.
They're not being taught or coached by anyone. They just hop into it and they're learning. No. Are they being coached though? Like,
no, they have to be. No, they have to be studying like 4 hours a day minimum study. Yeah.
Right. That's different because they have they have direction from somebody that's already done it. That's not a problem.
Yeah.
But I'm talking strictly for those that have no direction, no one to go to, and they just want to hop in the water.
And kind of learn as they go.
Learn as they go.
Yeah.
So they learn. So I find that way, the learn as you go approach, it's going to take them years. Why? Because now they only know what they know, and now they're developing poor habits based off of what they know so far, because all they know is what they know, right?
Yeah.
And it takes them much longer, and then by the time they reach out for help, they already established bad habits, and you're like, oh man, I got to break your mental. I got to reteach you how to train your mind.
That's right. That's a really good point. I didn't even think of that, of the bad habits that, because I think, look, even probably some of the real beginners, before they sign up for any program, sign up to have coaching, to start reading books, they go in because they're curious and they're like, hey, well, maybe I can do this. And so I'm hearing what you're saying is for the people who are coming in just to buy themselves into the ocean, you're trying to direct them in a specific way so that they're not.
I've been there. I'm only speaking for experience. Like I've been in those shoes before, where when I funded the Count 5K, I developed some bad habits. I don't know how I was able to make money, to be honest with you. Maybe it was the luck of the time. That's during when solar was booming. All those stocks are no longer on exchange, but I got lucky just buying solar. They would move 30-40% in a week, and I'm selling it. I'm like, this is too easy. But in that process, I've also developed, I'll tell you one of the trades I would never forget. It was Fannie Mae, late 07. Just because all those solars went
when
great
it was running
for me.
That was the
financial
crisis. Before the financial crisis.
No, this is after, like during the process. So I'm like excited because I'm making great money. Like, oh my gosh, this is easy. And then when the whole talk about the markets and you see Fannie Mae, I remember that thing dropped to like $14. And I'm gonna tell you my level of I did not know. And I thought that was a good deal. I bought it on a Friday. That Monday morning over the weekend, I will never forget, I'm getting ready to go work, and I turn on CNBC, and they talking about Fannie Mae and Freddie Mac. Fannie Mae was at $7. I lost half of my money.
Oh my God.
Just like that. Why? Because I thought it was at the bottom, that it couldn't fall no more. Why? Because of my inexperience at that time and the luck I had before. No,
but I mean, Kim and Kitten's trying to learn some lessons. I think you've touched on some. I mean, Kim and Kitten's like literally new to trading. We're trying to teach her penny stocks, which is the most volatile, crazy, unpredictable markets that you can teach, which I can tell by the interview that you already agree with. One of the lessons, particularly with penny stocks, is that there is no argument that they can go too high. They can go higher than you can ever think, and there's no too low until the company goes bankrupt. But what advice would you give to Kim? Would you say just don't trade penny stocks?
I would say do as much research and learn and understand them. Don't trade them. They're extremely lucrative, very good to trade. There's a particular strategy to trade them. I will never forget the open. You buy something the prior day, that open, the stock would fly, the penny stock. You sell at the open, right? For example, or one of the well-known strategies, because we all know that eventually they become dumps. They're going to fall. So if you can find a broker where you can easily get locates to short, you'll make a fortune trading penny stocks. Be a shorter of penny stocks. Don't buy them. Wait till all the hype dies and just short them. You'll make so much more.
No, and I tell Tim Bohen, who's the co-host, and Tim Sykes, they're all like, go long, because they think that the penny stocks are so volatile because there's so much new volume that's coming to the market, which is true. There's such a wave of new volume that a lot of shorts, everyone's saying shorts get squeezed. Yeah. But ultimately, if you let the stock go up enough, you wait for that volume to decrease, you wait for that first red day, and the company's junk, you will make a killing. And that's the bottom line.
Yes.
That's the bottom line.
I always say back test. Think of any well-known stock that had momentum and go back at that chart. Where is that stock now? And that's a nutshell. Penny stocks for you. So while everybody's in that momentum while it's running, just wait patiently. You'll catch a great trade.
But don't be short on the front side though, eh? Don't be short on the front side.
Don't exactly. Don't blow your account trying to hop before it even gives you a signal to short.
Don't catch the top. There's plenty of room on the bottom.
All right, so you were saying you recommend studying you recommend, so I'm fascinated by that. 2 months off? You took 2 months off, right? From a November, you didn't trade till the new year?
It was October, November. I took
Oh, wow.
3 months. It was
3 months off. And
3 months.
was that a commit? Were you specifically doing that because you wanted to not be distracted by the money and just really kind of like immerse yourself in what was happening so you could recognize it?
Right. I wanted I wanted more consistency. That's the best word I can put it. I didn't want to have where, a week I'm up and then a week I'm messing up. It's like, why? I thought I had it. And then once I realized that I'm not as consistent as I want to be, the best way to do is now observe the markets to fine tune where I was making the mistakes. And once that process happened, I never look back. I never look back. I know exactly how to effectively maximize the strategy. I know the risk. I know what time I'm going to trade. I know when I'm not going to enter a trade because of the taking the time to actually observe rather than focusing on what I can make that day. So that's what I did for 3 months.
It's amazing. That's so cool.
Can I just jump in and ask you, did you track any data on Excels or anything like that, or like price points or percentage gains, or was it really just intuition of like, I've seen this before, I've seen that before, and this happens to this and that happens and that?
I would love to work on that one day, is really getting the stats behind of, the type of trades, the type of gaps. I don't have stats on the type of gaps. That's going to be work, If something gaps out X amount of percentage, what's the most likely is going to do this or do that? I don't have stats like that.
Yeah, but so there's no stats, there's no sector, it's...
No. It's strictly, for me, is more so observing how...
Price action. Is it price action?
Price action and how the market moves. Very important.
And what's your setup there? I know Stephen was asking about it when we started. Just for new traders, what would you recommend that is you have a pretty fancy little desk there. That one in the middle is huge. I've never seen one so wide.
So one is elongated. I believe this is 23 inches or something, elongated monitor. The other one is a 49-inch Samsung Curve. But this is my second setup. Or I should say third. So what I mean by that, when I first started trading, what I'm on right now is my MacBook Pro, the same MacBook Pro from 2012. I only use this. I didn't have no additional screens, nothing. And I'm going to tell you a great secret. The less space you have, meaning the less monitors, the less distracted you're going to be. So if I only had a space like this, I can only watch most two stocks, meaning that's all I'm going to trade for the day. And I'm forced to be focused. So although I have this, trust me, I'm missing something. I'm always missing something because I'm watching way too much. I'm missing a lot.
I'm seeing you missing stuff. I see it's not distraction. I'm seeing you missing opportunity. I'm not sure about that.
That's awesome. That's awesome. And do you feel there's a couple of questions I remember you answered about the emotional side of trading. Well, just speak to your kind of, how do you stay calm? Is your pattern and your style causing you to bump into stress, or is that part of why you have picked this strategy, because it keeps you away from stress or tension or doubt?
What keeps me away from stress are the rules I developed, that plan. I would never forget, is more so when I started 2012, it's like I used to feel anxiety going into the market, like I'm about to make a first trade, and my heart used to race. I probably had too much size, 1,000, 2,000 shares, who knows? I used to feel it. And nowadays, because I approach things so much differently from how I used to approach things, throughout that process, I developed rules, meaning I know based on the amount of shares, what's my stop has to be. I know that I'm only allowed to take no more than 4 trades a day. If I make money within the first 2 trades, my third trade, I have to knock off most of my share size. Meaning, if I'm entering the stock with 1,000 shares, 2 trades in a row and they're green, and I got the itch to still trade, my third trade, I'm only going to do 500 shares. Because why give back money when I already made the money? The goal of the the goal for me is always to be able to pull money out of the market. I don't want the market taking money from me because I'm over trading. So once I hit 4 trades or 3, sometimes it's only 3 for the day, I stop. I walk away. That's it.
Wow.
So those keep me, stress-free. Stress-free.
No, but I have the same. My rules are basically, if I take a big position into the market open in the first 5 to 10 minutes, because in penny stocks, that's where a lot of the money is, and you'll short the spike before the wash, or you'll short the bounce after a wash if it's particularly weak. The next rule for me is I will take half size on any other position after that, and it's the exact same rules that you have. And basically, what it does is it eliminates anxiety, because you think, I'll follow this process over and over and over, and over and over and over I've made money. So the responsibility is not the process, it's not down to me. And because it works so many times, you don't need to worry about what was right and wrong. You say, well, 80% of the time this works, so I don't need to have stress about my decision, right?
Right. And let's say, for example, if I lose 2 trades in a row, I have to sit back and wait for the third trade. If I lose on the third trade, I call it a day. I don't even take the 4th trade, because I know at that point in time, I'm not in sync with the market. Something's wrong. And more than likely it's me. And I'm okay to walk away. And everything I'm saying is based on experience. Because in the past, when I didn't walk away and I'm revenge trading, by the time I look at my P&L, I'm down more than I was initially within the first 2 trades. Because I'm revenge trading, I'm not thinking logically, and I'm just like mad trying to make up the money. So
can I just ask you? I mean, no, we've all been here as traders before, but how long will you fight a stock before you just think, nah, no, this is against me, I'm done? How long will you fight the price action? Like, I'm talking 5 minutes, 10 minutes, half an hour. How long will you be like, I'm right, I know, I've seen this pattern before, and will you argue against the price action?
I've done it. How long? It all depends. It all depends. So are we still sitting in the trade? Meaning, like,
we're in the trade.
We're in the trade? We have to put if that's the case, we have to pull up another time frame and make sure that maybe it's not playing off of a, for example, 5-minute chart or a 15-minute chart. Maybe the pattern is really a 1-hour chart. So if that's the case, then I know I'm going to be sitting in for a few hours, because they're not playing off of that particular time frame for the pattern. I've been there. Bowen.
So you're not adding to losers. You're not adding to the losers, or?
Oh, never. I don't add to losers.
Okay.
And that's another thing. Once I have my position and it goes against me, it goes against 10, 20, 30 cents before it even hits my stop, I'm not adding there, because there's a possibility I'll get stopped out. But when it reverses and goes down, let's say I'm short, I add on the down drop. We add for confirmation.
Add to the winner. Add to the winner. Don't add to the loser.
If it breaks out, now I got confirmation we're breaking. I'm adding into that. So we add to
Never add to losers.
Never add to losers.
No, golden rule. What people like? I had last month. I had all green days. How do you have all green days? Well, because I take a starter, and if I'm wrong, I quit. Simple as that.
Yes.
Simple as that.
Yes.
Simple as that.
Yes, exactly.
Add to winners. I don't add to losers. I cut losers. I add to winners.
It's awesome. It's awesome. This is great. All right. So we're going to wrap up soon. So I'm just curious, for people who have full-time jobs, Latoya, for people who, now maybe are working remotely and do have some time where they could consider whether they could do this. I'm sure we have people watching who are, fantasizing about being a trader, and they're not really sure if they can do it. What would you say are the questions they best ask themselves if this is for them? What are some of the things that you would say, these are, besides study, besides getting really familiar, besides possibly having a coach or a training system that you plug yourself into, Anything else that's important for them to think about?
So if you have a full-time job, it's very possible, very achievable to actually trade the markets. Just keep in mind, you don't have to be a day trader. There's the swing trading, and there's also another terminology I'm gonna throw out there, which is called trend trading, right? Trend trading, you can hold week after week as long as the trend is intact. I can give you numerous examples, but it's all about time frames, right? A lot of the excitement when it comes to the market, how people get attracted because of the fast money that day traders are making. So they automatically assume that this is the only way they can make money right now, when in actuality, there's other styles of trading, other methods that more benefit somebody that works a 9 to 5 or even a shift. It doesn't matter how you work, where you can buy a stock on a Monday and by Friday be in profit because it went to your target. That's swing trading. Or you buy a stock the month of June let's back up, the month of April, and then in June you're up even like $20-$30 a share. That's trend trading because the trend never broke. So just know that there are different opportunities within the markets outside of day trading. Always remember that. And if you can dedicate at least 30-40 minutes a day, even after you come home from work, just dedicate it to studying. That really helps accelerate the process, because you got to be able to see things and understand and look at the charts and just track the price action in order to really get it. Like you can't just say, hey, I'm gonna buy this, but you never attempt to really study or put more time and effort into developing the skill. So that's one important thing, is studying the charts.
And just tell me, like, how you had this little baby and were able to trade. You said you had her bottles on the desk, the trading desk. So just give us a little bit of window into that
and that's where the mat came in from, because a lot of the times I didn't have the desktop. I just had a mat because I wanted to be mobile, just in case I had to bring the computer with me to do whatever it is, change a diaper or something like that.
Yeah.
But it was challenging, but at the same time, I got used to it.
Yeah.
Most things, like when you get used to it, no longer becomes that challenge. And I really cut it off at a certain time. So it worked well. Both of my daughters are close in age, 17 months apart. And I had to do it twice. And just imagine a little toddler running around and a baby. But I kept them within the same room, meaning I moved my Mac to the living room where one can crawl and do whatever. I kept them entertained.
Yeah.
That's why it was very important that I stuck to the rules I established. So I'm not in front of the computer all day. And we go.
Did that inform then it sounds like that informed the pattern that you gravitated towards, because it you knew with that pattern you'd be able to be with them after 12 noon or not be like distracted and then lose.
Right, exactly. Right.
Okay,
right.
That makes a lot of sense. So
Definitely.
Your lifestyle and your day-to-day experience is part of what informs the strategy that a trader is going to use, is what I'm hearing.
Yeah. Well, outside that, it's not necessarily mines in particular.
Right.
You have to think about a lot of traders. A lot of traders understand that 1 hour in the market, the open, is the most volatile of the market period. And that's where the money's made or lost is within that time frame. So a lot of traders with experience want to take advantage of that first hour. You do it right, you don't have to look at the market again. But then there are some traders, they just become addicted to trading. And that forms a bad habit in itself. You just don't know when to stop,
How do you know that you might be addicted? What is it you bump into? What did you notice about yourself that you had to course correct?
No, I can't say I'm not addicted to trading. And I know what you mean, but it's more, I could cut it off, or I can go on vacation. Like, for example, there's traders, they'll go on vacation and they still trade. I go on vacation, I don't even know what's going on in the market. I don't care. I leave it alone. The market's going to be there when I get back. I'm on vacation, I'm relaxing, I'm enjoying how I want to live. I don't want to be defined by what the market's doing all the time. Like, I can't let it breathe.
Yeah.
But some traders can't do that.
Yeah.
That's what I call, that's the addiction. Like, if you can't walk away for a period of time, you're addicted.
Yeah. Yeah. Stephen, any closing questions or thoughts?
No, I think your strategy is super solid. I think that you've like kind of monetized it to your best advantage, and credit to you for cracking the larger caps. I think it's the harder market. You might say the penny stocks are harder, or I'm not sure, but I think credit to you for nailing the higher caps, and I wish you the best in the future. That's it.
I appreciate it. Thank you. Thank you very much.
Latoya, tell us where people can find you, and you're teaching, you're educating traders. So tell us all of where we can find you.
All right. Well, my social medias, specifically, you can follow Facebook, The Profit Room, THE Profit Room, The Profit Room. Twitter, same thing, The Profit Room. Instagram, the same thing, The Profit Room. And our YouTube channel, where we put out content, The Profit Room as well.
That's
and
beautiful.
If you want to email me, my email is latoya@theprofitroom.com.
Perfect. I'm so happy you were here today. Thank you for your inspiring story, because just as a woman, I found it helped to just see women talking about their stories and their background for me. So I'm personally grateful to you for the guts that it took. I know you maybe don't think it took a lot of guts, but since I'm scared right now, shitless, to be quite honest.
You'll be great. You'll be great. I think once have you made your first trade yet, or are you still in your learning process?
No, I'm in the learning process, and I just opened up the paper account with the StocksToTrade Pro platform. So
okay, once you have even if it's a simulation trade, once you have a few of them that go your way, it's just going to give you more confidence that you can do it. It's always the first trade is the hardest, but once you get used to a certain protocol, you're going to do extremely well.
Okay.
You can do it. Definitely.
So
anybody can do this, all right?
Really? Do you
have
think
fingers? Yeah, fingers.
Anybody can, honestly. You don't know.
That's so.
But with willpower and determination, anyone can do it.
Wow.
Yes.
It's awesome. Latoya, this was so much fun to have you here. Thank you for coming.
Thank you very much. Have a good day, everyone.
Okay, you too.
Aloha
for now, everybody.